all, let me just put it in plain terms. The market is absolutely fine. Now, I do realize, I did recommend the hedges, but let me make something very clear. The word hedge in the English dictionary means you're hedging a long position. So it doesn't mean you take your whole portfolio and you buy a whole bunch of SPY puts and this market doesn't give in and you're in a world of pain. A hedge simply means that you have a moderate amount, whatever the case may be, out there in between the longs that we're trading in. We have some very successful movers just today alone on some new initiations that that are so if things do go upside down and we're down 100 points or 200 points, that those little babies which are trading the SPY puts that I keep on talking about, and you can pick your own poison of choice, which are around 60 cents or so, are probably going to be $1.20 within what, 10-15 minutes if we have a surge of selling. So just keep that in mind. But looking at what I'm seeing here, and it's still early, mind you, and I'm trying to read the tea leaves as quickly as possible. There doesn't seem to be any major selling pressure. Now, saying all that, we all know what volatility algos and high-frequency trading programs can do. We could get one of those tape bombs, which basically means a news burst coming out of Athens, or we could get a news burst coming out of the IMF, Christine Lagarde, or we could get a news burst coming out of Yellen because she slipped and fell, and in this Q&A session that's going on, she says something that the market basically misconstrues, or whatever the case may be, and then boom, all of a sudden you see that move. You see that quick 10-point drop on the SPY on the E-minis, and your puts just go overboard. And you're in the money. But saying all that, this is what I'm seeing. Now, I'm monitoring a lot of things at one go, okay? And I want all of you to understand, especially the new members, that there is no way humanly possible, and I'm a straight shooter on this in this service, okay? And people who know me know that I can walk you through every single nuance that's happening in the market. I can just give you a very precise macro view of what's going on, and it is up to you. And if you're an active trader, it is completely up to you to have your screens open, to have multiple screens, to have these charts open, especially on the futures side, or monitoring the VIX, the futures, and many other things that I look at, and make a determination whether or not you want to stay in the trade. Just because you have a little hiccup and something falls 2 points and something falls a point or slips here and there, doesn't mean the technical pattern has changed. So in order for I go ahead and broadcast if I see anything that is that has completely changed the technical picture on any of the things that we're trading in almost immediately, okay? But it's up to you to go ahead and monitor the the nanosecond moves, and if you're going to keep looking at those nanosecond ticks, then you better make sure that you don't leave the screens whatsoever at any given time, right? That's just the way it is. Now, saying all that, the volatility remains to be steady. We are overbought. I'm sorry, volatility remains steady. We are overbought, but again, we are overbought on a short-term basis, and the overbought conditions were relieved earlier, believe it or not. And now this is what we're seeing. Now, these are the E-minis. These are the things that drive the market on the SPYs, and this is what I've kept on showing. And a lot of the newer members will get used to looking at my charts. If you want to see a 30, so this is where we are, and look what's going on underneath. These ticks mean a lot to me to give me an idea. So we got oversold at around 8 o'clock this morning before the market opened, and right now we're here. So unless we completely get very severely overbought up in the 101, 102 level, we're only at about 68. As you can see, these are live beings. They're moving, right? Obviously, because the market's not static. Look at this volume burst coming in as they're buying the contracts or selling the contracts. So unless we are very much in this zone here, and this is a 30-minute, okay, so it's a shorter time frame, then don't expect to see any type of major pullback. Looking at the 4-hour, which is important, and I want everyone to focus on this. You can see here that the last 4 hours, it's all buying. It's still green here. We're looking at this here. This doesn't tell me that we are in that severe overbought conditions and winding down. We were starting to do that till about 5 o'clock this morning. right? Then we turned around. This is a longer term chart. This is the next one next to the daily. This is the 4-hour chart. So at this point, what it looks like, and this is what it really comes down to, I have the Fibonacci levels here that I've shown. Let me remove this so people can see it. I put it out there in the Twitter post. So what this looks like to me, and again, things change rapidly, all right? So I can't really tell you what's going to happen in the next hour. So is that the market wants to make a new high. Market wants to break out of this level here, and that's 2121. For it to go there, the market needs to get another roughly what? 16 points, right? 16 points or so. So 16 points, S&P points or E-minis are roughly about 100 or so Dow points. So 100 Dow points translates into roughly about 18,200. All matches in. So will the market get up there 18,200 before even correcting a bit and coming down towards maybe at least a mid acceleration band, 2090, all these cases? I don't know. If it happens, great. We'll make a ton of money on the puts. But right now, it's unlikely from what I can see currently because of the strong relative strength in the overall markets. It is a rising wedge, and rising wedges do correct. So it could very well happen, not necessarily today. It could happen later on this afternoon. I'm sorry, it can happen later on this afternoon. It can happen tomorrow. So that's basically, what can I say? That's just the way it is. And you have to be, cognizant of that. Now, strong stocks, let me just show you. We have, so what we have here is, whichever way you slice it or dice it, you can see here that, and this is a free stock charts.com that you can use. So getting my drawing tool here, one second. The highlighter. So you're starting to see the 50 and the 34 starting to curve up. Now this is on a 4-hour. That's as close as you can get to a daily chart. So if it's starting to curve up, I'll tell you, this market will basically, it's just going to power up and get towards 2140, and the Dow's going to make a new high. It is very possible. The other alternative scenario is that let me just show you this. Is that we can come down a bit, test this 50 and the 34-day moving average, and then bounce from here. I mean, that would be the best case scenario for us to make money on the puts as well as make money on the longs. Now, these two double bottoms, which were, which was basically a market structure low. This is a W pattern. I don't think we come down to 2070 on the S&P unless we have a real Greek, again, another repeat of the Greek saga, okay, which is possible. There could be parliamentary revolt, there's a lot of stuff going on, okay? There could be riots on the street, somebody gets hurt, it shows on CNBC, all over the media, serious stuff, right? And Germans get really pissed off, and so this we could easily fall 100 to 200 points rather rapidly. However, from what I can see is the possibility of that happening, and everything is a probability game. Keep in mind, trading is not a game of certainty, right? People have heard me say that a zillion times, and please stick it in your head. Trading is not a game of certainty, neither is investing. It's a game of probabilities. What is your probability on the upside? What is your probability on the downside? Your risk reward, and if your risk reward ratio is more towards the reward side, you take the trade, right? So bottom line is that at this point, a corrective pullback would bring us down to about 2080. That's about 20 points, a little bit more than that. So that's about 120 Dow points, and then a possible move up. Whichever the case, as you can see this pattern symmetry as it's building here. This is still on the table, slight pullback, testing the 50 and the 34, and then a move up. So whatever happens, unless we see a breakdown below the 2070 level, and of course I'm there to always, broadcast this on my live Twitter feed, then things are A-OK. We are overbought, there's no question about it, but keep in mind that we can remain overbought for a bunch of days, and I've said this before and I'll say it again, okay? Reminding everyone, this is monthly options expiration. Monthly options expiration has a 90% probability from what I've seen and experienced of being a bullish event. So the point is that if that's the case, then these overbought conditions can just stay up here above the blue line over 75 on the RSI for the next 48 hours. So that's, that's the quick synopsis of the market. Let's show you guys the Dow Jones Industrial Average. My charts are very precise. The question is how you play around with them. This is a powerful rebound, okay, whichever way I slice it or dice it. I'd like to see a 200-point pullback, to refresh things, buy things back cheaper, things like that. But the reality of the thing is the market doesn't, like they say, you got to buy, when no one wants them. And I was there buying, hands down. You all know that, okay? And the fact is that all of you guys who didn't, honestly speaking, you should, honestly put yourself in detention or punish yourself or just stock board yourself. How about that, okay? Because that's terrible if you didn't buy these lows, okay? This was a powerful low, and you could have had some positions, left in there, and you could even bought on Monday, and look where we are right now. So this is a very precise chart that was drawn, weeks ago, and let me show you the chart first. First of all, we're right here, right? It's not rocket science. We're right there at the downtrend line. Now, given what I'm seeing here, and I'll show the internals in a quick second, it looks like it wants to break out. It wants to break out, and it wants to hit the upper end of the acceleration and the Bollinger Band. That's around 18,200, 18,300. There's also a resistance level here, these little peaks, right? So that's around 18,150 maybe. So we're not even close to that. So we could easily, honestly speaking, we could go up 80 points here. It's just the way it is. So if this was a failure point, right there, about a little less than 18,200. So why is it not possible we break out here, test this, and then make a move down, test the 50 and the 34, and make a move from here? Come down to about 17,900, 17,800. That's around 200 points from here, as I keep on talking about the 100, 200-point pullback, which could come at any time, or which might not come. I don't know. And then make a move up. Whichever the case, it looks like the market wants to. There's a favorable bias for the market to test the previous highs. That's tape reading. Now, let's see the internals to see if they're telling us. We are getting overbought. All the stochastics are telling us that we have more to go. This is a daily chart, mind you. So what happens intraday over the next 24 to 48 hours is not my concern. This is a daily chart. I mean, it is my concern, but I'm showing you the chart as I see it. The daily chart is telling you that it wants to replicate this pattern. And if that's the case, then we're getting up towards that 18,300 level. Let's look at the volatility, the vortex indicator. And the vortex indicator is telling you clearly the green line is moving up sharply, and the red line is about to come down. So what's that telling you? That means the market has an upward bias. Let's look at this. And this caught my eye yesterday, and in the advanced coaching that I do yesterday, the members will attest to this. We saw this massive move on OBV, on balance volume. That's shorts getting squeezed big time, and new money coming into the market. Okay, so bottom line is that we have this blue line here just shooting up. Bars are moving up. It's certainly getting overbought. So a little corrective move would be nice, or it can push up a little bit more. The MACD signal right here, and you can put this all on your charts anyway. The MACD signal is also starting to move up, so similar to this. So if we're going to get, and this is the scary part for people who are committed in dogmatic shorts. I'm a tactical short. I'm not a dogmatic short, okay? So the bottom line is, that if we get a move like this, which came off the February lows, well, it's going to be very dangerous for the shorts. But that came off 17,000. Okay, so this is coming off 17,400 or 17,500, so in midway. So I don't expect that to happen. But whichever the case, this could repeat itself. Now, I've always said, and this is where the big money was made, that if 17,500 or 17,465, or give or take a few points, didn't break, we would have a huge rally. That's exactly what happened. So now we're fighting this downtrend line. Chances are we break through this downtrend line. Given so far what we've seen on the bank earnings, given so far what we've seen in the chip earnings in the form of ASML this morning, the way Apple is acting, that's most probably going to be the case. If we do break 17,500, 17,400 level, and we break, is there a possibility to drop 1,000 points from here? I doubt it. It will happen. Believe me, it will happen. It might happen in the month of July, um, uh, um, for all I know, or it could happen in August. So the chances of it happening in July are getting minimized because we are getting towards the end of July. Well, we're in the middle of July. Saying all that, keep in mind that this is the middle of the month, and we do get turbulence around the 15th of the month. People who have followed me, made money off that, know very well, and that's the reason why I have the hedges, just in case. In whichever case, like I said before, don't have large, sizable positions because we could reset anytime, and a reset is simply a fancy word for using that we are going to alleviate overbought conditions by pulling back a little bit. So that could come anytime. Otherwise, the charts are constructive. And the last thing I'll show you is this is the band we're moving in, right? Now, here's the thing I'm going to plug. Every single Clueless8 member who has taken the first steps towards really understanding what really goes on, not the garbage that's talked about elsewhere, okay, have taken the advanced coaching sessions. I want people to sign up, every one of you, to sign up for the group coaching sessions, learn things I've learned over the years. You will piggyback me and move fast forward. You will be much better than me on what I do, okay? And I cover all the technical aspects. I cover behavioral game theory aspects, which in my opinion are the fundamental reasons why people don't make real money. Because our brains, as I'm Shogun likes to say, are triggered for failure. Don't ask me why, but that's just the way it is. We are tuned to say no. We're never tuned to really think, what if it goes right? All right, so I covered that. Slam Shogun, my tech admin, covers the setups on the platforms, options management, all that kind of stuff. So we do a fantastic job for a minimal amount of money just to cover our costs and a little bit of our time. All right, everyone knows that. You want to validate that, look at the testimonials, read it, talk to these people who have taken the classes with us. Okay, and they're there in the room. Click on them, talk to them privately. So I suggest you do that, because if you keep on fooling yourself and you think you can understand all these complicated and in many cases, in most cases, very precise charts that I keep on showing out there just by using your own, well, I understand it. I've been following you for a bit. Trust me, you're fooling yourself. That's it. I'll open up to quick questions, and I'll do this for probably another 10 minutes or so. 11 minutes. We'll go till 2 o'clock. How about that? Okay? And keep it short. So go ahead. I'll open it up for questions. What's your read? Okay, RUT is the first question. Bullish. I find it to be bullish. I've shown that everything here on the daily charts. I'm going to just show dailies right now. Okay, there's the first green shoot appearing. That's a great sign. You know what happens as the first green shoot appears? The next green shoot appears. So if you're going to swing the RUT, that's the best way to do it. You're going to play it intraday. You're going to go a little bit crazy. So unless you're a real fast trader, don't play it intraday. So this green shoot looks like, it wants to rise to about this level here. And of course, this is positive. And this wants to go towards that. And I basically shown this repeated times on my on the charts. I like the RUT, US small cap growth, I think is in great shape. So that's your answer for that. Okay, IWM RUT, and I'm showing you the daily chart. So this is a swing play, and again, it can come down and retest 1260, come down in 50-day moving average at 1255. I think they're all buys here. Till if it breaks below that 50-day moving average, that's a different story. But so far, this one green shoot is, I repeat again, this is a powerful signal. Because look back at the history of it. There's at least a couple. Okay, so if you have one, two, another couple of days, it gets even up to here. Well, this baby is going to go up here and move towards the 1280 level, if not 1275. End the story. Okay, let's see here. I have next one. What's your read on CL? CL, I'm going to show this quickly. Wow, went off on my other screen. Way too many screens here. 1 second. That's oil, by the way. Oil futures for people who don't know. I'm just going to do a look at the hourly. The hourly is project out of all these channels, right? Channels are all money makers, I'll tell you guys. So let's do it from here. So right now I'm using the Darvas box, which my coaching session members know, use very effectively. It's at the bottom of the Darvas. This seems to be the floor. The top of the Darvas is 53. I think at this point, just looking at that, I think oil goes higher. Oil is very oversold on the daily, on the 1 hour, and you can see that stochastics are also saying that it's going higher. McClellan is minus 122, quite oversold. So all the indicators are pointing that oil is going to bounce from here. As you can see here, that's been validated by buying coming in right here as we speak at 1 o'clock. They're buying the oil futures, Again, you can watch it like this right there. Okay. Next question. Why do you use Bollinger's on the price chart and the MACD for some of your charts? Because it works for me, Stephen. Okay, because it works for me. It gives me a range play as to where it can go. Okay, right now it's giving me what are Bollinger's and acceleration band. They're simply ranges. What's an acceleration band? It's like when you hit the gas. Okay, you hit the gas and the 480 horsepower hits the wheels and you're off at 140 miles an hour on the track. Okay, that's acceleration band. So when the market accelerates to the upside or the downside, you've used acceleration bands. Okay, when the market otherwise moves in between the Bollinger bands. Ask Mr. Bollinger why he's so good at what he does. All right, but that's why I use it, to understand the range that it follows in. Look how it works. Look how it works. It works like magic. Comes to the bottom of the Bollinger, moves up nicely, gets to the top of the Bollinger, pulls back a little bit. It's just one of the variables that I use. Next question. No questions? Everyone shy? Okay. I have 7 minutes to go. Markets are still there. Western civilization is still alive, and I'm waiting to see. Okay, Biogen update. Let me see if I have the Biogen in here. Biogen was actually up earlier, so I hope you did something with it. Remember, what this is me to a very important point here. If I'm playing the small lottos and things like that, and I'm going to swing for a long time, or at least it's up. Use your discretion to take some profits. Don't always wait around for my signal. And I'm just warning that to all the new members, because there's a lot of trading things that are happening in between. So let me just pull up the Biogen. I thought I had it here. Biogen's fine. And I'm going to put it up here for Mr. Openshaw. Oops, your last name has been leaked out there. Hold on. It's completely fine, and this is obviously the naked chart, and as you can see here, and you can mix it in with my chart from yesterday. This is right at that trend line, and I believe that it's going to break out. And in order to validate that point, you might want to just go with the stochastics. And what is the stochastics telling you? The stochastics are telling you this is in for a nice bounce, and that's going to bring it up to that 420 level, if not the 430 level. Let's say 420, that's 18 points from here. So from a swing standpoint, it is in great shape. From a short-term hourly standpoint, it'll just do what it needs to do, which is basically go back and forth. Follow the volume, nice declining volume, little bull flag building here. And again, people who have taken the courses with me know very well exactly what patterns I'm talking about. Many of you probably know better, because I'm a great pattern reader, and I think, but I'm not the greatest technician in the world. So you guys probably know that. It's a minor bull flag building. So from a swing standpoint, it's in great shape. LinkedIn is a buy below 220, buy below 220. Okay, where's my LinkedIn chart? And again, remember, in a fast market, don't wait around for prices like, LinkedIn is right here. And I put my charts out there for everyone to see. So resting right on top of the acceleration band on the 30-minute. Let's take a look at the hourly chart. On the hourly chart, yeah, you could wait around. If it goes to, if LinkedIn closes this gap and closes below, that's not a good sign. That's not a good sign, right? This is just a consolidation. This is a hourly bull flag being constructed, channel, right there. You can actually draw it as a channel. So I don't look around for perfect prices. I look at a price range, I buy it. If I have to cost average down, I'll cost average down. If it moves fast against me, I'm sorry, after I buy it, I'm going to take some profits. That's trading. Don't wait around for like some sort of nirvana point that it's going to reach. 90% of my charts reach where they go. Now, at what exact time frame they move on, that I can't tell you. But especially of those deep, dark lows, when I called all those shots, they certainly did. That happens quickly over 24 to 48 hours. But the rest of the time, you gotta manage your thing. You gotta if LinkedIn is going higher, sorry. So yeah, you could wait around. I mean, what does it matter if you buy it at 219 or 220? You buy a little bit here, you cost average down a little bit. The charts are fine. I've shown some fantastic charts on LinkedIn. I mean, look at this. I've drawn this. Study it. I've said where it can go. There's a huge gap here. This gap is 250, lower end of the gap, and I believe I showed the move that it's going to come to about 227. So that's your answer. Price line. I think price line's ready. Price line is, technically it's where's price line? There. I like this chart a lot. And you know why? Take a big fat crayon and go like this. Boom, boom. There you go. At one point, it is going up here. I'm telling you right now. So if it slides a little bit and comes down, I think I'm going to be so far sticking with this trade. I think it's in good shape. It's right there. It's hitting some resistance, upper Bollinger, all that stuff. That's on the daily, mind you. All right? So that's on the daily. So again, I repeat, that's a market structure, dragon bullish. Simple W pattern. See that? Right. So the minimum move, I think, happens in the 1200s. And whatever happens, it's going to happen very, very fast. So please be ready for that. You won't be able to buy it when it's moving. And let me show you one other thing here, which is the hourly. It's a good looking chart. This is nice too. Nice little bull flag building. Nice little bull flag building here. Look at that. These things, once you chart, I've been charting for years, they start talking to you. This is nice. Now, if it breaks below the bull flag, let's say below 1163, or even below, let's say 1167, that's a different story. Now, remember, the volatility algos and high-frequency trading programs are, this is definitely a good chart. I think, very high probability it gets to 1220. So that's it. Any other quick questions? Because I'm going to wrap up now. I got 1 minute. And I recommend every one of you, and first of all, let me just say this. I thank every one of you for your support. You guys are what makes the community great, and all the new members who have come in. It's a little bit of a learning curve, what I do. I'm very unorthodox with my work, but I'm also very precise and disciplined. So again, it's a mental game. Fix your mindset, fix your mentality. Think big. Think big. Don't think 10-cent limits. I don't care how small you're trading. Okay? Think big, and you're going to profit big. And that's the God honest truth. Think small, you're going to get out of trades every 5 seconds. Believe me, I've been there, I know it, I still fight it every day. So I'm not saying like go out there and get a second mortgage on the house and trade the market, but the reality is don't listen to all the garbage that our markets are completely overvalued and all that crap. Be a tactical short, tactical bear at times based on these technical levels. Don't have to be a dogmatic short. Don't listen to all the garbage that they say about the U.S. being this and that. The reality is you want a real bubble. I've said this a zillion times. I'll say it again. Look at the Chinese market. That's a bubble. All right? That's a pure bubble. So are we there yet? Oh, far from it. Okay? Everybody's, excuse my French, beep scared and terrified every time the market goes up 200 points. Oh, it can't do anything anymore. It falls 300 points. Oh my God, it's the end of the world. It's a death cross and you name it. But you know what? Technically speaking, all the market's doing is moving in a range. It's moving in a range. And I'm not saying, and here's another last point I want to bring up. So much stuff in my head. Why does the market always have to have a huge breakout or a huge breakdown? Why can't you trade the ranges? Ever thought of that for a minute? Why can't you trade the ranges? Why does it have to have the big breakout over 18,000 and go to 19,000? Why does it have to fall to 17,000? It can just trade in range, a couple of 100 points. So change your mindset, the way you think about trading, and you'll be good. That's it. We will have this recorded. I want everyone to join the coaching sessions, and And let me, I forgot to talk about, one second. Where's the Netflix? So here's Netflix. Sorry about that. I forgot. So here's Netflix, and this is the best representation that I can show. So I drew these things here, right? So I don't draw things just because I feel like drawing things on the screen. There's a reason behind it. And most of you know that those reasoning are very precise. So here's two gaps here. So I drew these little gaps, these little elliptical eclipses, right? Right there. So Netflix came down here, and let me move these babies, all right? Let's move these little flying saucers out there. That's Pluto. How about that? So you have a gap here, okay? And guess what Netflix did? It came and filled the gap. Now the thing you have to concentrate on is Netflix was overbought, okay? And this is an hourly chart, so it had to come and retest this orange line. That's the 34-day moving average, and here's a 50-day moving average on the hourly. So is it possible that it can slip to 97? Absolutely. Does it change the directional movement of these two lines, the 34 and the 50-day moving average? No. This is still moving up. This is still curving up. So unless you see these things curving down, there isn't a trend change. Now, what happens in earnings? I have no idea. All I know, stochastics are nicely oversold on the hourly. Okay, every time it gets oversold like that, stock has a bounce. I'm not saying the stock's going to go overboard and just go somewhere all the way up here, but I'm looking for a trade up to this, let's say, the 101 level. I'm looking for a trade. This is the VWAP, by the way. So what are the targets that I put out there? I put 102. So I'm basically looking for these lines to keep on moving up. It's a nice retest. It's also a consolidation channel. Let me get the crayon. It's a consolidation channel. It's a nice consolidation channel after making this big move, okay? And from this consolidation channel, fill this gap. There is another gap down here, by the way, okay? So just keep that in mind. So there's a gap here, and a move up would be really nice for the bulls, up past 103, or even a move up towards 101. Just that's it. You don't have to go crazy over it. And how you're going to play the earnings, I'm going to put out a straddle out there for people to see. Saim Shogun can put out something out there that he does on spreads, and that's the way you do it. So Netflix is overall, look at that, how beautifully it bounced right off the lower Bollinger, the gap. Of course, it can slip through the gap. Volatility algos can fool anybody. So, but I'm just letting you guys know what it's doing right now. Let's take a look at the daily. The daily on Netflix. Let me get all the lines out. The daily on Netflix is basically saying that there could be a gap fill towards 97. All right. This can be construed as a drop or maybe just a bull flag. We don't know yet. So there's obviously risk. Obviously, there's risk anytime you play earnings. This could be construed as a bull flag, okay? And so I wouldn't, like I said, unless you're a risk player, don't play the earnings. And if you do play the earnings, play with the small amount, so that if it goes, it goes. So I'm placing my bets. The numbers are going to be good, and I'm going to see what I do by by the end of the day. That's the end of the story. All right. So I'm signing off right now. Thank you for listening. Study my charts, and we'll go from there.